Hey folks, I hope you continue to stay safe and sane, particularly if you have kids at home. They're school at home, so it's interesting. But anyway, I hope you're staying safe and sane. This is for a lot of people week 3, for some people a lot more. It's like the month number 2 for some people, parts of the world. And we'll get through this, but I just want to make sure I at least mention it again, that I think it's important to take this serious. Now, what I want to talk about today is by far what our best idea of the house is, my personal view, my company's view, and that is an allocation to gold or gold mining stocks. Now, it's important to be able to take this in the right context. So what we're going to do is we are going to first look at the structural picture. So there's a reason why there's a lot of tailwind for those assets. And then we'll look at the charts, right? The charts are just going to basically reflect what the structural is telling us, but it's the visual aid. So let me flip on over to the chart. And before we even look at the chart, though, let me quickly lay out the structural backdrop. So what we have is we have an environment where we essentially have negative growth, obviously with the complete collapse of the world economies due to the virus. We have very low to zero inflation, at least not as measured by the traditional standards, which is probably maybe a bit outdated anyway. We have, obviously inflation in things like healthcare over time due to an aging population globally. But traditional measures of inflation is basically non-existent. But most importantly, and this is the third point, but it's the most important part, we have monetary debasing. Basically, the Fed going crazy on the balance sheet. And this is not just the Fed, it's also the ECB and other parts of the world. They're doing the same thing. And, even though that's probably what needs to be done right now in this emergency situation, it ultimately there'll be issues with that. But the point is, this is actually very bullish for gold and gold miners. So, I actually find gold particularly to be a difficult thing to trade from a tactical perspective. But when you have the structural tailwind as we have now, and I'll give you another reason for gold miners that's even more bullish, then we're at a point where the tailwinds are such that it doesn't really matter how choppy the asset tends to trade. Usually it should naturally lift. So having said that, just quickly before we go into the charts, I do want to remind you one more time of the Wealth 365 event. I mentioned that yesterday quickly. This is the largest, and quite frankly, it's an amazing online education event. It's completely free. I go to it every year. I'm a speaker, but also, and this is very important, I listen to the presentations, not all of them, but as much as I have time for, and I always walk away with some good stuff. So I'll be speaking there as well. I'll talk about an option strategy that we're deploying right now in this market that's helping us navigate very nicely through these choppy markets. So again, sign up for it. It's totally free. You get a lot of free stuff with it as well that you'll be able to use, tools and all sorts of stuff. And the link is down below, or in an email if you got this by email. So let's go to the charts. The first chart we're going to look at is a long-term chart of the price of gold as represented by the GLD ETF. And you can see there's this inverse head and shoulders pattern. We're breaking out. It's been choppy over the past few weeks, gold, because it's been used as a source of funds. A lot of people got margin calls. Things weren't very liquid, and so they had to use the one thing that was liquid, which is gold, or maybe a gold ETF, to take some to basically rescue those positions to get enough funds. But I do ultimately think that the gold trade is maybe just beginning, and that's interesting. Now, if you look at this on a monthly chart, just to kind of give you this perspective, you can see that last month, which was the month of March, we actually had a long range. A wide range on the month, but we rejected the highs, but more importantly, the lows. So to me, this is still a very bullish setup. Now, if you look at the gold miners, we can look at those through the lens of the GDX ETF. On the monthly chart, first of all, you can see the same thing, long rejection. So the lows were rejected, meaning the sellers got exhausted. On the weekly chart, it looks like this. You can see we're still in this channel, but I think we could break higher pretty soon. And what's really important about this is that we have the price of oil declining sharply still. I know we had a big bounce just the other day, but for the most part, the price of oil is basically halved, and that is one of the largest input costs for gold mining stocks, for gold miners. So if you look at a stock like NEM, which is Newmont Mining, and I'm going to again quickly start with the monthly chart. You can see, but again, rejection last month, and it's really just starting to break out. We actually had a beta reversal bullish signal on our proprietary Market Rover platform triggered the other day. And if you look at Newmont Mining here in the daily chart, you might be able to see it. So we're basically really itching to kind of get higher here, particularly if we get past the $50 mark. I think we could start to accelerate. Now again, this is more of a structural idea. This is not to say that these stocks have to explode tomorrow, but I think through the lens of the next few months, maybe the next few quarters, this is our best idea that we're telling clients. So here you have it. And again, let's quickly wrap up the structural stuff. So we have the structural tailwinds in terms of very little to no inflation, negative growth, monetary debasing, and then of course for gold mining stocks, we also have this situation with the oil price basically getting completely decimated, which again is the major input cost for gold stocks, gold companies, meaning their margins expand as their input costs goes down. So anyway, folks, I hope this has been helpful. I'll bring up this chart of gold again, and again, if you guys have time, by all means, I would urge you to sign up for this. If it wasn't a great event, I wouldn't tell you about it, I promise you, but it is a great event. It's a lot of different speakers, and you're gonna get a lot of little tips and tricks. Like if you just listen to a couple of these presentations, I promise you pick up little things that otherwise you may never come across. So anyway, the link to sign up for this stuff is down below. Any questions, folks, as always, please let us know. Subscribe, hit the thumbs up, like button, and spread the word. Thank you and take care.